Good morning to all traders and welcome to this market insights video provided to you by Orbex. Stavros is here, and today we're going to have a quick look on FX majors. We're going to have a quick look on Aussie dollar. We haven't looked at it for a while because it actually reached an April, if not mistaken. No, hold on. No, it was a March 2018 high. Pound also because it reached a April 2018 high. And also going to have a look at the usual euro dollar. It hadn't actually reached a new high just yet, but it's lagging, but it's most likely that is going to be the case in the next few weeks. So that's because obviously dollar dropped further down on Monday, as investors now expect Powell to provide a dovish message. That's what it looks like to me, at least, right? During his testimony before Congress later today. Market's reaction, the truth is that it suggests that market participants anticipate the Fed's chair is going to respond to higher inflation expectations that the markets have with some sort of reassurances regarding continuation of QE and not rising interest rates, right? Obviously. Now, the downside, of course, on the greenback allowed commodity currencies mainly, such as the Aussie dollar, to break the fresh multi-year highs. Whilst at the same time also giving a boost to FX majors, euro and pound, but not obviously limited just to those two. This is what we're going to analyze. Now, with the COVID bounce back trades, I like to call, continue to inspire confidence, the race to a slow and cautious lockdown exit route, as the Boris's announcement yesterday also proved, has already begun. Right now, the real question is how long it takes each country to end all COVID-19 restrictions, because these are the currency pairs likely to perform better against others. So, Aussie dollar first. It looks like we're heading to the 80 cents, and we haven't seen that 80 cents for a while. Last time we talked about the Aussie dollar, we were somewhere down here, and we had identified a triangle over here, right? So we've got 1, 2, 3, 4, and we talked about moving higher with an ending 5, right? So the truth is that we've broken the 100 Fibonacci extension of waves 2, 3, and 4 with the correction and taken into consideration at 78.81, and now the next level up that we'll have to put on our watch list is the 79.80 cents, that's because that's the 161 Fibonacci extension. Now, obviously, we need to take into consideration the 80.40 after, because that is going to be the 200 Fibonacci extension of those two moves. Okay, so this is what I'm looking for the Aussie dollar. Since also we've broken above the previous high, this is expected. Now, the extension to the upside, guys, is I mean, it's not like it's very uncertain, but it's very hard to determine. Usually at the 80 handle would attract a lot of buyers if prices are below, because there it is the level where there is a lot of, well, usually after seeing all this, for like nearly 2 years not getting there, then usually it's going to be short bets, but then it could be a continuation higher as well, we do not know. Either a false break or a valid one. Now, let's go to the second performer here. It did a less than 2 years high as well, pound dollar. Last time we talked about pound dollar, I think it was last Thursday. We were looking at this opportunity as a 3 and a 4, and we said that we didn't want to cross below wave 1. And we said also that it's very likely that we're not going to cross below that level because we are considering this move on the upside as an impulse, this last wave, right? But we also said that in case we do, then most likely what we would have is we would have this turning into an ending diagonal, right? Because there would be interaction between 4 and 1. But it didn't go below that, so I remain adamant to this scenario. Okay, I'm expecting another move to the upside with the 200 Fibonacci extension of waves 1 and 2 actually taking out already 140, which is a very good psychological handle as well, and prices remaining above this for a few days, I would say, few sessions. Then I'm looking at the 261 next, which is 140, 143. Now, similarly to the Aussie, this is uncharted territories have been for quite a few years. So we do not know where the end of this upside is going to come in. The end, when I mean, I'm not the end of not the trend specifically, but it could be the end of with a wave, right? With a continuation on the upside, taking place after some sort of correction, okay? Because at the end of the day, guys, this could be 1 and 2. This could end up being all a 3, and then we're going to get 4 and 5. We do not know how that is going to pan out, but keeping a frequent eye on those particular pairs, we'll have a very good idea at least where we can go, on a weekly basis. So, and this is what the plan is here. That's why we're looking at these particular pairs on a frequent basis. And last, let's have also a quick look on euro dollar. Okay, euro dollar has been a bit confusing because last time, the moment we crossed below that level, because it's below 1, yeah, we thought that it's very likely that we're going to continue lower. Okay, this could become like a W, X, and Y or something like this, yeah? However, then we continued higher, yeah, after a rejection over here. Now, since we have the interaction here, 2 cases come in mind, okay, 2 counts. One is this is 1, and this is 2. We're going to get 3, 4, and 5, and this is going to be an ending diagonal because we have this interaction. The other, however, and obviously is going to take a little bit longer than we thought, or compared to the first count. This is an ABC. This is an ABC, and wave C is going to be quite extended. We're going to get a new high, yeah? We're going to have to go with our Fibonacci retracement tool over here and identify the 23, the -0, and the 1, 3, okay? So these guys either, yeah, 125 still in the game, an expanded flat, or a running flat. So that's the ABC, that's the other ABC. We get anywhere above 123.53, and then we should lower with a 5 wave. 120.50 makes a running flat, and 117 makes the expanded flat. And from either of those levels, then we can expect an upside to take place, okay? I know it's a bit of an unusual scenario to have a look at this early stage, but the moment this interaction happened, yes, the first thing that came to my mind was, well, we can have that being an interaction, when it is a corrective wave rather than an impulsive, right? So 123.67 could be a very nice level to keep an eye on, yes, and then 124.49, which is 124.50, pretty much, okay? So this will be all for the day, guys. I hope you enjoyed the video. In case you are also into any wave analysis, go ahead and share your account with us as well. I'll have a look at it and give my feedback as soon as I can. Thank you for watching once again, and we will speak again tomorrow with another market insights video, probably on metals and energy. So we're going to talk about gold, silver, oil, and the likes, okay? Take care and trade safe.